Welcome to a special midweek drive home edition of Orange Pill with Napoleon Hill. As the final days of December 2025 unfold, Bitcoin continues its familiar dance of volatility. Earlier today, during Asian trading hours, the price briefly climbed above $90,000, touching as high as $90,200 before easing back to settle around $88,000. Thin holiday trading volumes and broader market hesitation contributed to the pullback, creating yet another classic surge and retreat pattern we have seen several times this month. Beneath these surface waves, however, the underlying signals remain encouraging. On-chain analysis shows continued accumulation by large holders, particularly those controlling between 1,000 and 10,000 Bitcoin. According to Glassnode Insights, this whale cohort has been the dominant buyer throughout the $80,000 range since late November. While smaller holders occasionally distribute into strength, these experienced participants absorb the supply, treating dips as opportunities rather than threats. Smart money, it seems, is positioning patiently for the next chapter. Let us reflect calmly on today's price action. Bitcoin began the session with renewed optimism, rising more than 3% at points as risk sentiment improved briefly. Short positions faced liquidations exceeding $100 million during the upward move, helping fuel the momentum. Some observers noted possible capital rotation away from overheated precious metals, gold and silver easing after impressive yearly gains toward digital assets. Yet, as equity futures softened and year-end profit-taking emerged, the advance faded. This sensitivity to liquidity in quiet periods serves as a gentle reminder of Bitcoin's current environment. The repeated tests of $90,000 resistance, followed by measured retreats, reinforce the consolidation theme that has defined late 2025. Technical observers point to a potential dragonfly doji forming on broader timeframes, a pattern suggesting strong buying interest emerges whenever weakness appears. As long as rising support levels hold firm, the longer-term structure stays constructive. Turning to our trusted voices for perspective, Michael Saylor continues to highlight Bitcoin's transition toward institutional maturity, with strategy maintaining steadfast reserves amid evolving market dynamics. Lynn Alden has drawn attention to ongoing liquidity adjustments that may support Bitcoin's next meaningful advance. Jeff Booth frames these fluctuations within a larger shift toward technology-driven abundance, where temporary noise matters little against structural trends. Saifedean Ammous reminds us that fiat currency debasement ultimately drives necessity-based adoption, rendering short-term price swings secondary to the pursuit of genuine sovereignty. Recent podcast discussions echo similar themes. What Bitcoin did and Bitcoin collective conversations emphasize whale accumulation as one of the most reliable bullish indicators, experienced capital stepping in while others hesitate. The Bitcoin way consistently reinforces the importance of self-custody, especially during volatile stretches. Hold your own keys, remain calm, and let time work in your favor. Two broader topics merit gentle consideration as we drive home tonight. First, the ongoing conversation around quantum computing and Bitcoin's security. Michael Saylor has offered a particularly resilient viewpoint, describing potential developments as the Bitcoin quantum leap. Rather than posing an existential threat, quantum advances would likely prompt coordinated network upgrades to quantum-resistant cryptography. Active coins could migrate smoothly to new, secure standards, while long-dormant or lost coins would effectively remain frozen under older protocols. The result: enhanced overall security coupled with a natural reduction in circulating supply. Near-term risks appear minimal, and the community would have substantial time to implement thoughtful changes. Once again, Bitcoin demonstrates its anti-fragile nature, growing stronger through challenge. Second, contrasting developments in centralized digital currencies. The European Central Bank continues progress toward a potential digital euro rollout around 2029. Proposed features include individual holding limits to prevent it competing fully as a store of value, alongside privacy elements and offline functionality. Yet the centralized design, with programmable caps, oversight, and intermediary reliance, stands in stark relief against Bitcoin's permissionless, borderless character. These CBDC milestones often serve as timely reminders of why true digital sovereignty, free from potential limits or revocation, remains so compelling. As we synthesize tonight's reflections, volatility creates the dips that whales quietly purchase. Repeated resistance tests build constructive tension, and foundational strengths continue to deepen. 2025 draws toward a close not with dramatic fireworks, but with quiet maturation, laying sturdy groundwork for 2026. To close with a brief insight from Napoleon Hill. Strength and growth come only through continuous effort and struggle. In the world of Bitcoin, market fluctuations represent that necessary struggle, the forge that tempers unbreakable conviction and lasting wealth. Drive safely, hold steadily, and accumulate wisely. Until our next weekly gathering, stay sovereign,